Alrighty, thank you everyone for coming in and joining us. We're just gonna give another minute to just let the room fill up a bit and let people file in. Alrighty, probably good to good to kind of kick things off. Again, just really appreciate everyone taking the time to join us today, and hopefully, everybody can learn a little bit more about the project and get some of their questions answered. Again, kind of like how I mentioned in the announcement, just feel free to kind of upvote and react to the questions that you see as most important, most applicable, best questions, because we want to hone in on the high quality questions to be able to hopefully get in and out in about a half hour, 45 minutes at the very most. Make this as efficient use of your time as possible and help you learn along the way. So with that, I just want to kind of kick things off and get into the main topic of today, which is understanding canonical vaults, and talk a little bit about that. And then after that, we'll move into the questions that were asked in advance, and then the live questions that we get. So, I'm just going to kind of walk you through, what are the canonical vaults? When are they coming? What is it? What TVL is being targeted, and really what does it mean for you as a yAxis holder, or at least I hope you're a holder if you're joining us today. So from there, you know, basically, I'm sure if you've spent some time in the Discord, you've heard, V3 or Era 2 or Canonical Vaults, and it's the main kind of vision for the project is Canonical Vaults. That's TNC's brainchild, and it's we're looking to launch that in Era 2 in mid-July. So kind of what is it? So we're looking to expand the amount of assets that we offer for deposits. So right now, just sticking to the stablecoin MetaVault, and then we're gonna branch out to Ethereum, Bitcoin, Link, and so that in itself will create a lot of market opportunity and expand the addressable market. And the nice part is that these assets, the yield that people are earning on them is much lower than on stables, so it's pretty easy to compete and attract TVL. And that was really laid out really nicely in the distribution proposal of the YIP 9 that passed pretty handily by the community. So I think that message really resonated with people. But for people that maybe weren't around in the community back then and want to learn a little bit more about canonical vaults and some of the TVL being targeted, I think today presents a good opportunity for that. So basically, just going to walk you through kind of how yield would be earned, and then some example TVL out there, and then how we plan to kind of capitalize on that. So basically, there's basically two major ways that you would be able to earn yield. So you're gonna plug existing vaults, so deposit into existing vaults with the native asset. So for example, Badger's wrapped Bitcoin vault, or Alpha and Alpha Hamora, their Ethereum pool, those have native yield, like on the native asset that you're actually depositing. And then the other way is to post these assets as collateral, and borrow stable coins against them, and then just find a higher yield than the borrow rate. Like, a really easy example is that the Meta Vault right now, giving 30% 40% APR. you know you can borrow somewhere for 10-15% on stables right now and just capture that spread. So you know that's another way to kind of to earn yield on those underlying assets. And the nice part is we'll obviously be seeking out always like the best strategies to do that, and also pooling capital. So maybe somebody with $1,000, $2,000, $3,000, that strategy doesn't really make a lot of sense for you, because by the time you post the asset as collateral, withdraw stables against it, and deposit them somewhere else, you've spent, you know, 10 or 20% of the APY that you were open to earn just in gas. So by pooling assets, it's going to expand opportunity and allow smaller users to participate in that. And that's really just the whole goal of the project, and really making DeFi just easier and more accessible. Um, and then in addition, I mean, Bobby kind of dropped this last week, the idea of Bitcoin bridge partnership to really bring on some native Bitcoin as well, and just kind of branching out into that community. So again, another kind of addressable capital pool for us, and just some example TVL on the market. I mean, like Alpha Homora has like $550 million worth of Ethereum right now, earning less than like 4% yield last time I checked, which was few hours ago. And then Badger has about 400, a little over 400 million in a wrapped Bitcoin vault, earning under 30%, which obviously 30% is really good yield. But we have that market position at the top of the stack where we can just plug into these underlying strategies, and then offer some yAxis tokens on top, boost that yield, and then draw the TVL, and then capitalize on the buybacks from that. So that's really just the big advantage of having our position at the kind of the top of the yield stack, and kind of as was laid out in the distribution proposal, like at a $30 token price, even at $1 billion of TVL, we could still deliver a 13% boost on the underlying strategy yield, which is more than enough to attract this TVL. So that 4% Ethereum yield goes to 17%, and so that's a huge opportunity for people to want to move their capital over to the yAxis Canonical Vaults. And so that's just some examples to kind of give you guys an idea. And like those two capital pools just in those two places are $1 billion right there. Not even including Link, which is like I said before, something that we could post as collateral and borrow against to find better yield on those stables. And another component of Canonical Vaults, we've mentioned this as well, is gauges. So, this is a concept popularized by Curve, where basically you're able to lock in staking and divert, using voting power by locking and staking. You can, divert emissions to your desired vault. So obviously, yAxis has some pretty strong ties to the Link community. So maybe, Link is going to be the vault that gets the most emissions diverted to it. We'll see. And there's not a lot of competition in the Link space, so that could be a really big opportunity for us. So, looking at gauges as having a time lock component. So I know that's been something that people have kind of been asking for and looking for, and it just brings added token utility. So that kind of brings us to the next topic: is what does this really mean for yAxis holders? Is gauges give staking with gauges and Canonical Vaults gives you that added token utility of being able to vote and divert emissions to your desired vault. So it creates utility not only from the revenue to the token, but then also actually integrating the utility of the token into the platform, and actually using it to use the platform. And it's pretty unique in that sense, and value accrual and then utility with the platform. Not many tokens really offer both of those components. So pretty strong there. And then currently we're doing about $18,000 worth a day in buybacks, when we were at like 200 million TVL. That was like, we were steady at that level for a few days, and that was kind of what we were buying back. So just to give you an idea. And then so at $1 billion of TVL, like I kind of laid out before, that would be $90,000 per day, or $33 million a year, which is larger than the current market cap itself. And that's exactly why you just want to kind of farm a bigger stack now, and just capture those future buybacks and those future cash flows.
And just to jump in from me, just to say that that's based off of a curve strategy, right? So that's with quite a low underlying yield. So the better strategies that we can deploy, the more yield that we are generating for ourselves, and the more buybacks we get from that. So it's definitely in our interest to continually develop new and better strategies that we can integrate into our vaults.
Yeah, absolutely. Thank you, Bobby. And with that kind of just wraps up a quick overview of, what canonical vaults are. And if you have any like further questions, feel free to toss them in. I'd love to, see some questions on that. So with that, we're gonna kind of move into the questions that were asked in advance, and we'll try to run through these relatively quick and combine them where we can, and then we'll move into the live questions from there. So Zemus, by special request, uh, he, he asked, "Why would I ask a question for the Q&A when all I want to do is learn more about yAxis?" Well, I guess what we'll say to that is just hopefully that intro helped and helped you learn a little bit more about the product launch ahead and the vision for the project. And we love to have you around, love to have you keeping it light always in the chat. And accumulating with your food money there. Um, SRA1 asks, how is APY and APR determined for the staked yAxis? We had a forum discussion about that, so I don't know if somebody can link that for you there, but it's a fixed reward per block, so it's purely based on the number of tokens in the pool. The more tokens in the pool, the less reward will go to each token. So it's just it should kind of decrease over time, but then the champions, the great harvest should also give you a little added boost. Although I don't know too many projects that are offering the staking rewards that yAxis is offering right now. And so I'm gonna combine Upperfoot's question with Big Poppy with Thunder PL's question because they all were asking about eligibility for the Great Harvest. And so, really appreciate all the community feedback and discussion that took place on that. And I know, the team's putting together a proposal, finalizing it right now, and supposed to, you know, expect to hear something, early next week on that. Wanted to just take the time to really work hard and make a good, fair eligibility mechanism and really a fair proposal, and that just maximizes the development resources we have and ensures that the development resources go to the product because that's the main thing, and then but still making it you know still rewarding early adopters and making it the best program that we can do. So really just achieving that balance between development resources and then a good program, and wanting to reward everyone that's here and allow you to gain some rewards against that stack of tokens that you've been able to grow throughout era 1 and you will continue to be able to grow. So again, all the things about eligibility and qualifications and all that will be, look for something early next week. And then another question was about more utility for the yAxis token, for example, like an NFT program for all stakers, and like a lottery component. It's definitely a great idea, and I think that something like that is kind of already in the works with the Champions Table, Great Harvest kind of component. So definitely look out for the proposal early next week, and then let us know what you think in that regard, and if there's something that you would like to add or a component that's that you'd like to see included in addition, then feel free to um, you know comment and provide feedback there. Well, we obviously always open to incorporating feedback. That was why that we had that original discussion as well. Timmy Toes had a question about Chainlink's oracles. I mean, I don't know if we're really in a position to kind of answer that one. I think that would probably be more of a question for Chainlink, unfortunately. And then 2D.
I'll just, sorry, Cold Summer, just jump
Yeah,
in
no, you're
quickly.
good.
Yeah, I mean, the Chainlink, we used to have some Chainlink price feeds inside the Meta Vault, but we actually took them out because they were creating some issues with the conversion between different stable assets. So they've been taken out temporarily. So we'll just see if we can reintroduce them in the future as well.
Yeah, thanks, Bobby. Appreciate that added detail and color. So 2DA added asks what new strategies are being implemented in the future, possible Aave yield farming using L2s. Welcome to obviously welcome to propose new strategies on the forum and in discourse. And then, on the L2 front, I think we're just waiting to see which ones really have some traction over time and some sustained traction before kind of committing development resources in addition above and beyond V3 to something that might kind of come and go with the wind. So that's sort of I think the philosophy before, but I don't know if Bobby would be a little better to speak on that probably.
Yeah, I mean, so like I touched on earlier, the strategies are obviously crucial to us for how much buybacks we can generate, and as well as at scale. Once we have a billion, 2 billion TVL, then the amount that the emissions adds onto the APY is quite negligible compared to what we can give from the underlying strategy. So for sure, in time, that has got to be a huge focus of us, and we're trying to onboard at the moment a strategy developer into a full-time role, someone that's built some of the strategies before for us back in January from a bounty. We're trying to get them on board. Yeah, so that's definitely something we'll look to doing all sorts of different things, and it is going to be essentially a full-time role for someone to dive into. Our current team is obviously focused on the core offering, the core V3 and the vaults and the gauges. And yeah, we hope that someone else can come in and help us build out a whole range of different strategies as well.
Yeah, absolutely. And like I said before, always welcome to add anything on into the discussion on the forum. Um, and then there's another question about is the strategy for Link to leverage the Bancor pool, and if yes, how do we plan to secure a spot? The Bancor pool is full at all times. Yes, definitely aware of that, and that's why Link is such a huge opportunity for yAxis because there's not a lot of places to put your Link to earn yield. So as we kind of mentioned before, you can use Link as collateral on Aave. You can borrow against usually around like 10% on a stable, and then deposit the stables into a higher yielding strategy. So you can kind of create like a synthetic 20% yield on the Link in addition to some yAxis on top, and I think that should definitely be enough to really draw a lot of link capital and link holders, especially given the strong ties to the yAxis community.
And for us, like that's definitely our focus, because as we see now, like USD stable coins, the market for yield is quite competitive. You need to have kind of like at least 40, 50, 60% to be attractive or to kind of draw in any TVL over others. But with Link or Bitcoin or Ethereum, it's not really like that. So you can make much more efficient use of your tokens. Right now we need to churn out tokens to bring in TVL for the USD vaults. But that kind of mid stop when we have our V3 out, we're not going to need anywhere near as many emissions. And then in the future, when we go towards institutional capital, they don't need any emissions at all. So it's definitely like a stop or a focus for us to go to those assets like Link or BTC, because they represent 70% of all crypto assets out there.
Yeah, absolutely. And then, the last like pre-asked question was McDuff. I thought this was a pretty great question. It's like perhaps the harvest rewards could be like options and tied to a strike price, where it's sort of like you get rewards at each strike price. So it kind of maintains incentive to stay in. If you cash out pre-stake, you are penalized, like you just don't receive the full amount of the rewards. And I guess like, my personal thoughts would be this is a great idea. I'm just not sure about the, development resources that are going to V3 to make something kind of complicated like that. But I mean, it's definitely a pretty innovative idea. I don't know if Bobby has anything more to add on to that.
Yeah, so in era 2, we're going to have the gauges, and we can do different things with the rewards contracts for that. Right now, with the contracts that are already deployed, it's not so easy to just change it. You'd need to ask people to withdraw funds, then restake again, and different things like this. As well as the fact that we just want to make sure that we hit that deadline for era 2 and make sure that everything's there. But yeah, in era 2, we'll be introducing those kind of features. And one of them, for example, could be like Ellipsis did recently, where if you withdraw early, if you withdraw soon, then you have to pay a penalty back to the government's contract, which then gets redistributed amongst everyone else. Things like that we can do. So that those kind of things are up for discussion, and we're talking about them.
Yeah, no, that's fantastic. Alrighty, so moving into some of the live questions here. So Timito's asked, in a delegated staking strategy, what would happen if there were a flash crash of the underlying asset? So the goal of always a canonical vault is to just earn yield on the underlying asset, not necessarily just looking to outperform the underlying asset by a certain amount of yield, not necessarily to make the underlying asset go up. We wouldn't have any control over that, because if you try to get into that game, then you could potentially underperform the asset on the upside. So always just trying to give yield and just outperform the underlying. And then so another question about incentives in era 2 to keep your yAxis staked, and I think we've talked about that pretty extensively with the gauges, and Bobby just kind of talked a little bit about some of the optionality that opens up. That's really it's really an innovative tool for us to really add more utility into the token, and its use into the actual platform, in addition to kind of a revenue generator. And Timmy Toes asked, do you think that the vaults that are losing on the gauges, so he's basically saying, he or she's basically saying, you know, if the vaults are losing, basically, like if they're not getting as many votes for the emissions, do you think they might lose TVL? And TVL is always it's always a product of I mean, sorry, emission. I mean, sorry, APY is always a product of TVL in the vault. So, even if something is getting less emissions and there's less APY to higher TVL, then assets might withdraw, and it sort of rebalances, and then it will bump up the APY again, and then people will, redeposit. And even if, let's say, a lot of the emissions end up going to Link, like the Link vault, for example, then maybe that becomes like our kind of cornerstone vault, and we pull in a ton of TVL there, and it's still giving buybacks in the same sense. So the like I kind of laid out at the outset, is even at 1 billion TVL across all the vaults, it doesn't really matter where, you're gonna still be able to give that 13% boost. So really well positioned to operate at scale, even of $1 billion in TVL. So it doesn't really matter which vault is receiving the emissions, because it's all gonna generate to revenue for the product.
Yeah, I think you're right in saying that it is like self-balancing essentially, for natural kind of market dynamics. But just to confirm to people, it is like a weighted vote. So you're not going to get zero if no one votes for the BTC vaults. You're not going to get zero emissions, right? It is weighted. And then in the other extreme, if everyone's voted for Link, for example, if you come in as a new Ethereum holder and you want to vote for that, your vote is more powerful because you're the only one voting for that. So there is like a weighted balance, which helps things recover back to kind of an equilibrium. It's a tongue twister, yeah. Just as happens now with the curve style gauges, and that's been really successful for them.
Yeah, absolutely. Neil asked a great question. Bobby, I'm probably gonna sling this one your way. Basically, what is the delta between funds showing interest in yAxis and actually getting them on board? What are maybe some of the risk, compliance, regulatory systems? What are some of those like hurdles into to actually getting them from interest to onboarded?
Yeah, I mean, I think that's one reason why we go through these gateways as like an intermediary, essentially. I don't think that someone like BlackRock will go straight into yAxis. They're probably going to go through someone else. So typically, the flow of funds is that an intermediary crypto fund would be they'd be pitching their own funds to their own clients, such as BlackRock, and they'd try and close a round of, say, $50 million that they can then invest into different DeFi projects, if you imagine. And those kind of companies are more comfortable investing directly with yAxis. And we've seen some large deposits. We've seen one of 30 million, one of 27 million, another of 20 million, for example. And these aren't coming from like Joe Blogs on the street. They're coming from professional entities that are choosing yAxis. So it's pleasing to see that we already have some traction in that regard for USD. But then on top of that, we're looking at more like professional entities for Link, like node validators, for example, or BTC miners, big mining companies, people that are going to be holding on to that underlying asset and they just want to earn yield on it. So there are some companies out there that have raised huge amounts of digital assets and they're storing those and they're not earning anything. So we really want to be pitching to those kind of people as well. And then I'd say like the third type of project is also to treasuries. So many different crypto projects have managed to raise, hundreds of millions somehow into their project treasuries, and they're looking for a way to generate yield off of it. And that's another way for us to easily hook those projects who are already inside the DeFi space or crypto world, at least, into our vaults as well. So there's lots of different angles for us, lots of different business development opportunities for us, and it's just for us to go out there and start pitching.
Yeah, thank you, Bobby. And that was fantastic. And I know, especially on the miner front, like a lot of these miners want to continue to hold the underlying asset, especially Ethereum. Like Ethereum miners are just absolutely printing for the last, last year. They've been doing so well, and wanting to hold on to that Ethereum and not really having a place to go and earn good yield on it. But if we can offer that, then it's fantastic. And I know Bobby's been mentioning some potential conversations with some of the miners. So that's another potential pool of capital, and exciting to see already the results so far, and that will continue as we open up more asset classes.
Yeah, I think I mentioned it in the Discord a few days ago, but yeah, I had an interesting conversation recently with someone with an intermediary essentially, and they said exactly the same to me in reverse, where they have those big clients already who are looking to get into DeFi, but they just have no way, they just don't know what to do with it, and the intermediary doesn't know what to do with it either. So it's nice to hear that kind of confirmation of that. Of what we're trying to do, basically, and that there is a real demand for that, and they are looking for projects to deposit significant capital into.
Absolutely. So, last, want to try to wrap up some of these questions here within the next few minutes. So, if you've got one, I'd probably get it out kind of soon. I think so. There's a question about problems that QuantStamp discovered with the QuantStamp audit. So that was addressed by closing the vault to just the 3CRV token and just accepting those deposits to prevent any arbitrage opportunity. So that was already handled, I believe, mid-April. That was announced. It was prior to the revamp MetaVault going live, because at higher TVL it became a potential risk vector. So the team kind of just proactively closed that and resolved that issue completely. So that's something that was proactively done, and then GetGooded did a great job pulling those curve contracts onto the UI to make that conversion a little bit more user friendly, and then looking toward V3 and accepting all stables once again. So I don't know if Bobby had anything else on that.
Yeah, no, it's just like you said. Essentially, we are trying to get QuantStamp actually to update that audit just to reflect the fact that we have closed that risk off. So we do talk to them quite regularly. We have an open chat with them. So we are trying to get them just to clarify that, just to make sure that people aren't distressed or see it as still like an open threat.
Yeah, absolutely. And Upperfoot mentioned for the new age banks, would like a Revolut, would there be an opportunity to introduce the MetaVault onto their apps as a method of earning for the masses? Bobby, I don't know if you have any thoughts on this. I know like fiat on ramps and those types of partners are definitely in the works.
Definitely, I think we're still seeing such early days of DeFi, and when people see the kind of returns that people are able to get, they all want to get involved, and definitely expect those kind of companies, even like new age ones like you mentioned there, like Revolut, or even traditional ones like Visa, for example. We see them trying to get into DeFi in the future and to try and take part. So yeah, those are definitely another category of people that we can try and drum up some. I think actually Mr. Mentioned one of those to me earlier. So that's something that we can try and do and to see if we can start off slowly with them basically and build up a relationship.
Yeah, yeah, absolutely. And I think, a partner like that is going to turn to somebody like yAxis that's just, handling all of the details and all of the DeFi native knowledge for them and just kind of turning that over to a trusted partner that's, been audited multiple times and all of the above. So I think that's something that we could continue to pursue in the future and a really great opportunity. And we're in a great position to attract that capital for sure. So we're gonna make I see somebody type in, so probably gonna make that one the last question here. So we'll get that last question wrapped up. But fantastic questions today. Really good stuff, and hopefully everyone's just really learning more about the project and really the big things that lie ahead for us. I think the key is building something that the market wants, and that's what the team seems to be doing. And all the conversations that Bobby's been having seem to only reinforce that. Like I said, just waiting for this last question to get typed up here, and then we should be, yeah. I seen that you're gonna publish. Yeah, I mean like I said, I would expect proposal early next week. So I don't know, Bobby, do you want to share any additional information or details on that ahead of that, or just kind of like just wait for that proposal?
Yeah, I mean, I've started typing it up today actually, so that's something that we can reveal pretty shortly, and it should answer all your questions. Fair enough. Like when we initially announced it, it probably needed more thought actually. So although the original spirit and the concept of it is still there, we had to just go back and think about it a little bit more, and that's what we've done. So we'll be sharing that shortly in the coming days.
Yeah, sounds great. And thank you again to all the community feedback on that. And I think that's really going to help it, evolve and be something that the community wants. So, looking forward to that. And like I said, the great opportunities that lie ahead, and just happy to be in this sort of, pre-launch environment. We're able to just kind of, farm up tokens throughout the era, and then, looking forward to the big vision with V3. So thank you everyone for joining us. And like I said, hopefully you learned something new today, and hope to see you around. And feel free to ask any other questions that might have come up, via DM or just in any of the Discord channels. So, thank you again, and take care.